This week we saw an interesting story unfold. While many households are feeling anxious about the economy, the stock market just had its best week since May. That can feel disorienting, but it highlights an important tension in today's markets. I'm Jason Hunsucker, CEO and Senior Advisor at Sequoia Advisor Group, and this is your weekly market update. This week, stock markets saw strong gains. But this optimism wasn't driven by strong economic news. In fact, consumer confidence fell to its lowest level since April. The real driver was growing conviction that the Federal Reserve may cut interest rates in December. So while many consumers are feeling cautious as we head into Christmas, investors are bidding up stock prices largely on the hope of lower borrowing costs ahead. For better or worse, we operate in an environment where what will the Fed do often matters more in the short run than how healthy is the real economy. The Fed is made up of smart, generally well-intentioned people, but they are not all-knowing. Some of the imbalances that we feel today, like higher inflation, big swings in asset prices, and a $38.5 trillion national debt requiring nearly $1 trillion a year in interest payments, are in large part the residue of past interventions. Efforts to ease today's pain often push problems into the future. If everyone assumes the Fed will always fix it, markets can become more speculative and less focused on fundamentals. So what does this mean for long-term investors? First, it's reasonable to be skeptical when markets depend on Fed action rather than truly strong economic news. Second, it's a reminder that we don't want your financial plan to rely on perfect timing from the Fed or from anyone else. At Sequoia, we strive to build portfolios and plans that can live through imperfect policy, not just ideal scenarios. That means focusing on what we can actually control: your spending and savings rate, proper allocations, tax and estate planning, and your time horizon. We keep an eye on the Fed, of course, but we don't confuse short-term support for a long-term solution. So as we reflect on a strong week in the markets, our message is one of measured optimism and grounded realism. Enjoy the gains, but don't build your future on the assumption that someone in Washington can smooth out every bump in the road. If you'd like to talk about how this environment affects your personal plan, we'd be glad to walk through it with you. Thanks for joining me, and we'll see you next week.